Sack's CPA boss Alex Malley may have left the nation's biggest accounting body under a cloud, but a multi-million-dollar golden parachute ensured a soft landing. His $1.8 million pay packet also highlighted the issue of generous super tax breaks for the wealthy. Among the reluctantly revealed details of Mr Malley's generous package was $35,000 in superannuation contributions. Super tax breaks cost the government more than $30 billion annually, raising the question of why taxpayers are subsidising comfortable retirements for the well-off. Here's Andrew Robertson.
When CPA Australia finally disclosed Alex Malley's salary last month, all eyes were on the headline figure of $1.8 million. But it's another number disclosed that day which highlights the inequity of who the government helps. As part of his package, Mr Malley received the maximum pre-tax superannuation contribution of $35,000.
You either want to pay the budget, pay off our national debt, pay for schools, pay for hospitals, pay for age pensions, or you don't. And we just can't keep giving people that have money more money.
For someone on the highest marginal tax rate of 47% like Alex Malley, a $35,000 pre-tax super contribution brings a tax saving of $11,200. By comparison, a single unemployed person on the dole, or Newstart as it's known, receives around $14,000 a year. And Alex Malley was far from alone in receiving tax breaks he doesn't need, as a look at the annual report of any listed company reveals. For example, Commonwealth Bank boss Ian Narev earned $12 million last year, but still had $25,000 in super contributions made for him. Andy Penn at Telstra was handed $19,000 in super on his $7 million income. Richard Goyder at Wesfarmers received $32,000 in super on his $5.5 million.
If the purpose of superannuation is to supplement or substitute for the age pension and retirement, then those tax breaks should really cut out at the point where you're no longer likely to be eligible for the age pension.
Which is an income of $51,000 for a single person and $77,000 for a couple, but complicated by the fact that assets are also counted for pension eligibility. The Grattan Institute's official position is that the maximum pre-tax super contribution should be slashed to $11,000 a year, which equates to a maximum salary of $115,000.
We think that that's probably a little bit politically difficult to say to high-income earners, no, you don't get anything out of the superannuation system, whereas others do, particularly when you're being compelled to save through superannuation. And so the level of super tax breaks that we think is appropriate is really this $11,000 cap on pre-tax contributions.
The Federal Treasury estimates superannuation tax breaks cost the budget $31 billion last financial year, and because of the way the tax system operates, a disproportionate amount went to high-income earners. The government has attempted to rein that in by cutting super contribution limits and capping the amount that can be transferred to a superannuation pension account to $1.6 million.
We spend a lot of our tax breaks on people that already have a lot of money. And on one hand, that's, they've earned their money, they pay lots of taxes, and good on them for doing that. But what it does mean is that our system is skewed towards people that have the money.
The former head of the Association of Superannuation Funds of Australia agrees the system isn't equitable. But Pauline Varmos warns an upper income limit for super tax breaks could have unintended consequences, particularly for women.
We need to look at a system cap, a cap that applies across the whole system as a maximum amount you can put into the system and get those tax deductions. Because some people work flexibly, they may take a few years off, and you don't want to penalise them.
No one the ABC spoke to on this issue believed super tax deductions for wealthy people who can easily afford to pay for their own retirements should be abolished entirely.